What if the biggest move happening in Iraq right now has absolutely nothing to do with the central bank? While most investors are glued to their screens waiting for some major monetary announcement, the real action may actually be playing out in Iraq's parliament. Over the past few days, something that's been stuck in neutral for nearly 2 decades has started picking up speed again, and for anyone watching Iraq's economy closely, this is exactly the kind of thing you don't want to miss. Welcome back to Dinar Intel Hub. As we kick off this update, it looks like this week may stay pretty quiet on the Central Bank of Iraq front in terms of big public announcements. But don't let that fool you. Quiet weeks are often when the most important work gets done. Iraq's reform process doesn't move in a straight line, and some of the biggest breakthroughs in this country's history started as quiet conversations behind closed doors before they ever showed up in the headlines. One of the things drawing serious attention right now is the hydrocarbon law, what most people in this community simply call the HCL. If you've been following Iraq for any length of time, you know this isn't a new subject. But here's what makes right now different. There's a very real sense that this law, which has been sitting unresolved since around 2007, is finally being pushed back to the front of Iraq's political agenda. And that has a lot of experienced analysts paying close attention. So what exactly is the HCL? At its core, it's a law that determines how Iraq divides its oil revenue between the federal government in Baghdad and the Kurdistan region in Erbil. Since oil is essentially the engine that runs Iraq's entire economy, how that money gets split up touches everything: national stability, government spending, regional cooperation, and long-term economic planning. The fact that this has gone unresolved for roughly 18 years tells you just how complicated and how important it really is. Over the years, the back and forth between Baghdad and Erbil over things like revenue allocation, production control, and financial obligations has caused repeated flare-ups that spilled over into budget talks and economic planning across the board. Many serious analysts have long said that getting the HCL done is one of the key steps Iraq needs to take before it can build a truly stable and predictable economic environment. What's catching people's attention right now is that there seems to be genuine movement toward finally resolving issues that have been sitting on the shelf for years. No final deal has been announced yet. Let's be clear about that. But the fact that these discussions keep coming up at the highest levels of government tells you that Iraqi policymakers know this issue cannot stay unresolved forever. Now here's where it gets really interesting for dinar investors. One of the most heated debates in this community has always been about the connection between the hydrocarbon law and any future changes to Iraq's exchange rate. One school of thought says the exchange rate has to change before the HCL can get done. The other side flips that completely and says the law will come first, and everything else follows after. And honestly, both arguments have been floating around for years without a clear winner. That's actually why the smartest observers out there tend to stop trying to guess the exact order of events and instead focus on watching overall reform progress. Iraq's transformation is a multi-layered process. You've got fiscal reforms, banking upgrades, international integration, new legislation, economic diversification, all of it moving at the same time. Locking yourself into one specific sequence of events often means you end up missing the bigger picture entirely. And here's a key thing to keep in mind. When a government is pushing through major structural changes, things rarely happen in the order that outside observers predict. Multiple tracks run at the same time. Legislative work doesn't wait for banking reform to finish. Budget planning doesn't stop while infrastructure projects get built. International deals don't pause while domestic policies are rewritten. Iraq has shown this pattern over and over again. Another topic that keeps coming up, and it comes up like clockwork every single year, is the claim that Iraq cannot pass its annual budget unless it first changes its exchange rate. This theory makes the rounds every budget season and gets a lot of people fired up. But when you actually look at the track record, the story gets a lot more complicated than that simple argument suggests. Iraq has passed budgets under all kinds of difficult circumstances. Oil prices have swung wildly. Political fights have dragged on for months. Reform priorities have shifted dramatically. And yet budgets still got approved, without the currency revaluation that many investors were expecting at the time. That's not a small thing. That history matters, because it reminds us that budget legislation and exchange rate policy don't always move together the way some people assume. That's not to say exchange rate conversations don't matter. They absolutely do. Iraq is actively working to make its financial system stronger, improve the investment climate, modernize its banking sector, and deepen its ties with regional and global markets. All of that is real and significant. But it also means we need to be careful about building rigid expectations based on assumptions that may not reflect how decisions actually get made inside Iraq's government. Here's the bigger picture you need to hold on to. Iraq's economic future is going to be shaped by a whole combination of factors, not just one single event. How the legislature moves, how energy policy develops, how fiscal management improves, how the banking sector grows, how foreign investment flows in, how trade expands, and how stable the government stays, all of these things together determine where Iraq ends up. Seen through that lens, the renewed push around the hydrocarbon law becomes even more significant, because it's another real piece of a much larger puzzle that's slowly coming together. That's why so many experienced analysts keep telling investors to stay focused on what's actually confirmed rather than chasing speculation about specific dates or sequences. The most meaningful signals are the measurable ones: the institutions getting stronger, the long-standing disputes getting resolved, the governance improving, the conditions for sustainable growth getting built. Those are the real building blocks. Everything else is just noise. As the week moves forward, the big thing to watch is whether the momentum around the hydrocarbon law keeps building and whether Iraqi officials send any new signals about revenue-sharing arrangements and broader reform priorities. The central bank may stay quiet for now, but the work happening in Iraq's legislative and economic landscape is absolutely still relevant. Sometimes the most important progress doesn't make a lot of noise. Sometimes it looks like slow negotiations and policy meetings and incremental breakthroughs that most people don't even notice, until suddenly everything clicks into place. For anyone watching Iraq right now, that quiet kind of progress may actually be the biggest story of this entire week. The direction Iraq is heading, and what it could mean for the country's economic future, is giving serious observers every reason to keep their eyes wide open. One of the biggest questions on every investor's mind right now isn't whether Iraq is still moving forward. The real question, the one that actually keeps people up at night, is whether the region around Iraq is stable enough to support the next big phase of its economic growth. Because no matter how much progress Iraq makes on its own, it cannot escape the fact that it operates in one of the most interconnected and volatile regions on the planet. Looking at what's unfolded over the past several days, it's becoming harder and harder to ignore the fact that regional dynamics involving Iran remain one of the most powerful forces shaping Iraq's economic environment. This goes way beyond politics. We're talking about something that directly impacts investor confidence, energy markets, trade routes, banking relationships, government revenues, and the overall pace at which Iraq can actually implement its reform agenda. For years, Iraq has been walking a tightrope between regional powers while trying to build up its own sovereignty and economic independence at the same time. That balancing act has gotten even more critical as Iraq works to pull in foreign investment, overhaul its financial infrastructure, expand international partnerships, and reduce its near-total dependence on oil revenue. None of those goals can be achieved without stability, predictability, and genuine confidence from both local and international players. And here's something that every smart investor needs to understand. When regional tensions spike, uncertainty spreads fast across financial markets. Businesses get cautious. Investment decisions slow down or get shelved entirely. Governments get pulled into security mode. Economic priorities that were moving forward can suddenly end up on the back burner while policymakers deal with more immediate geopolitical fires. That's exactly why developments involving Iran never stay far from the radar of analysts watching Iraq's long-term future. Recent reporting continues to flag just how fragile regional stability actually is right now. Diplomatic negotiations, sanctions pressure, energy security concerns, and ongoing geopolitical tensions are all active across the Middle East. Analysts continue to warn that uncertainty in any one of those areas can send ripple effects throughout the entire region, including straight into Iraq's economy and financial system. Now, does that mean Iraq's reforms have ground to a halt? Absolutely not. In fact, one of the most impressive things about Iraq over the last few years has been its ability to keep pushing reforms forward even when the region around it is under pressure. Banking upgrades, infrastructure projects, investment deals, energy sector growth, and government reform programs have all continued making progress even during periods of serious regional instability. Iraq has been quietly building a track record of maintaining momentum despite a complicated neighborhood. BTI 2026. But here's the point that a lot of investors tend to overlook. Major economic milestones don't typically happen at the peak of uncertainty. Big financial moves don't get rolled out when the risk environment is at its worst. Governments, central banks, and international institutions all tend to move on major structural changes when conditions are more manageable, when the ground under their feet feels at least somewhat stable. That's exactly why regional developments continue to matter so much to anyone tracking Iraq. The country's economy is deeply tied to energy exports, international trade routes, and broader Middle Eastern stability. Every time tensions involving Iran flare up, the effects ripple outward through oil markets, shipping channels, government revenues, and investor sentiment across the entire region. House of Commons Library. Here's where things get genuinely fascinating. Even with all the challenges, there are real signs that multiple parties across the region are actively looking for ways to de-escalate and bring greater stability to the area. Diplomatic conversations are ongoing. Various governments clearly understand the economic price tag attached to prolonged instability. Recent discussions involving Iran and international stakeholders have put a spotlight on the urgent need to reduce tensions and stop further disruptions to regional economic activity. Why does this matter so much for Iraq? It's actually pretty straightforward. When the region calms down, it creates a much stronger foundation for investment, economic growth, infrastructure development, and financial reform inside Iraq. It frees governments to focus on long-term planning instead of just surviving the current crisis. It gives businesses the confidence to actually deploy capital. It helps trade expand and economic integration deepen. That's why the most experienced voices in this space keep preaching patience rather than attaching hard expectations to specific dates or timelines. Iraq's reform story involves far more variables than just what's happening inside its borders. Political developments, regional security, global energy markets, and international financial relationships all help write the ending of this story. One of the worst traps investors fall into is reading every single headline as either an immediate breakthrough or a total disaster. The reality is almost always far more complex than that. Economic transformations don't happen overnight. Political agreements take time. Structural reforms take time. Regional tensions don't resolve themselves in a news cycle. Progress typically looks like a long string of gradual developments rather than one dramatic, explosive moment. That's why the smartest move right now may be pulling back from the prediction game and shifting into observation mode instead. Watch what the reforms are doing. Watch the legislation. Watch the banking developments. Watch the international partnerships forming. Watch the regional negotiations play out. Stay focused on the full picture rather than getting locked into one narrow expectation. Because if Iraq has taught investors one consistent lesson over the years, it's this: the biggest developments almost always follow long periods of preparation that happen quietly and out of the spotlight. The headlines that get all the attention are usually just the very last step of processes that were already well underway for months, sometimes years, before anyone in the public had a clue. As the coming weeks unfold, regional stability will remain one of the most critical variables to watch. Iraq is pressing forward with its reform agenda, but the speed and impact of those reforms will always be tied to the environment surrounding them. For now, the job is to watch events develop, track what's actually confirmed, and understand how each piece fits into the larger story of Iraq's economic transformation. That approach won't give you instant answers, but it'll give you the clearest possible view of where things are genuinely headed. If there's one truth that long-time dinar investors know deep in their bones, it's that patience gets tested the hardest right when things are happening under the surface. And right now, as Iraq pushes ahead across multiple economic, legislative, and financial fronts, a lot of investors are asking the same question they've asked dozens of times before. How much longer? It's a completely understandable question. Everyone wants clarity. Everyone wants certainty. But one of the most important things you can internalize about this investment is that transformations of this scale don't run on anyone's personal schedule. Think about it this way. If someone spends years waiting for a potentially life-changing financial event but never builds a strategy for handling it, they may not be in any shape to actually take full advantage when the moment comes. Preparation creates confidence. Planning creates direction. And people who do both tend to find themselves in a far stronger position, no matter when future developments actually arrive. Here's one more question worth sitting with. What if the waiting period itself is doing something important? What if the time between major developments is actually turning investors into more informed, more disciplined, and more prepared versions of themselves than they ever would have been if everything had happened in the first year? History is full of examples where the most successful people weren't the first ones to get an opportunity. They were simply the best prepared when that opportunity finally showed up. Looking at Iraq's ongoing reform process through that lens, the bigger picture hasn't changed. Progress is still happening in multiple areas. Legislative discussions continue. Banking modernization efforts continue. Economic diversification initiatives continue. International partnerships continue growing. Timelines remain uncertain, that's just the honest truth, but the overall direction remains absolutely worth watching. For investors, that means staying grounded. Don't let short-term emotions drive long-term decisions. Don't get too dependent on rumors or speculation-based timelines. Stay anchored in facts. Stay committed to preparation. Keep investing in your own growth and knowledge. Keep tracking developments with clear eyes and realistic expectations about just how complex Iraq's transformation really is. Nobody wins by spending every single day frustrated about things they can't control. What investors can control is their mindset, their level of preparation, their education, and their readiness for what's ahead. Those things have real value no matter what happens next week, next month, or further down the road. As we keep following Iraq's progress together here at Dinar Intel Hub, the mindset that serves investors best is one built on three things: patience, preparation, and perspective. The reforms will keep unfolding. The developments will keep coming. New signals will keep emerging. And when they do, the investors who stayed focused on the bigger picture, rather than getting lost in the noise, will be in the strongest position to make sense of whatever comes next.